Felix, there are 7 reasons why the market just flipped. It's not the 7 horsemen of the apocalypse. It isn't quite that bad yet. And we do have fluffy cats who climb all over me. So not a doom and gloom video, but I think it's an important one to watch. It is the first, I think, short opportunity of 2023. I'm going to run you through it. Of course, none of the following is financial advice. You know that by now. Don't listen to people with cats crawling all over them and a golden retriever sitting behind them because he wants more food. Let's jump straight into it. Okay, I'm going to literally give you 7 charts, 7 facts. You can look these up yourself and come to your own conclusion, guys. This is the S&P 500. And we have just hit today the 200-day moving average line. Now, the 200-day moving average line is the following. Let me get a yellow pen, and you see what I mean. That one there, the orange one there, that's it, right? That's the 200-day moving average line. We broke through it today, but we didn't manage to stay above it. And we've had this before. We had this here. We had this here. It's like the 3rd or the 4th attempt. 4th attempt in a row, is it? Yeah, 4th one, if you count the August high. So what does that mean? Well, the market isn't convinced that we've got the balls, essentially. And also, it happens to be exactly the point here. This purple line is the point where volatility increases. We call it the zero gamma line in options world, and you don't necessarily need to understand what that means, but what it means is if you go above that, the sun comes out, the birds start chirping, everything is wonderful. You go below that and waves start crashing over your head. That's the sort of space that we are in right now. And a little bit supported, yeah, by the shorter term moving averages, but very, very much a bearish signal. We didn't crack that. We didn't break through. Now, next one, bond traders are worried. If you've ever met a bond trader, they're usually fairly uneventful chaps. They don't get excited very easily. They wear gray, they wear little midtown vests, and they generally are very, very happy with their alphas and betas and gammas and sort of their numbers, right? But what are we seeing? Well, the bond trader fear index, this one here, it's called MOVE. It's shot up pretty significantly here. And at the same time, we have the VIX down here, which is our stock market fear index. And the stock market chaps are usually not quite as bright. So they're like, yeah, okay. It's gone up a little bit today, but it's still at pretty low levels. But I do always pay attention to the bond guys. I think they're smarter than us. VVIX, which is the fear of the fear index, the volatility of the volatility index. Strange concept. I know. Who comes up with this stuff? Very, very dull people, I imagine. But essentially, the green line here is the, if I can get a green pen at the same time. We need more color choices at the top there, Microsoft. In green is the VVIX. And the VVIX, it's going to the roof. It's jumping into lifeboats and screaming, somebody rescue me. The same time, VIX also picking up, but not as quickly. Generally speaking, when VVIX shoots above it, tends to be a bit of a leading indicator. No indicator, of course, is 100% accurate, but we've got 7 of them here pointing in one direction. If you haven't already signed up for our free masterclass, this one is on the 28th. Can't really see that, can you? 28th of January, it'll be live from Cannes, and I'll teach you how Wall Street bankers make more money than you with less risk, and how you can do the same thing. By the way, for all of us, I'm also going to show you a trade that you could possibly do with the setup that I'm explaining to you. You can profit from every calamity, right? So fear is officially back. This is the fear index. And again, you might be wondering, who's this strange guy with all this fear? This is the VIX today. And the gray line down here is the VIX yesterday. And it doesn't take a genius to figure out that it's higher, and higher means, basically, right? So that's that. And note, there's a really, really, really big gap here on the short term, the 30-day. So people are suddenly thinking the next 30 days are looking pretty scary. It's not Halloween, no. Hedge funds. Hedge funds are positioned like they were in August. What happened in August? You want a chart of what happened in August? I'll give you a chart of what happened in August. We've got the S&P on here twice. August was here. August was, rally time, right? Remember that high we had? That's how the market is positioned from a hedge fund point of view. And what do I mean by that? How much leverage are they using to be in the market? How much margin are they using? If they're using lots of margin, it means they're already positioned very, very bullish. It's harder for them to put more money into the market at that point. So we've picked up a lot here, big move up. Not quite the super peaks here that we've had, but still very significant move up, but generally means there's less chasing, there's less money flying in. And this here also, nothing left to squeeze. You can take the orange and squeeze it as hard as you can. Nothing comes out of it. So you grab your Orangina from the fridge. That's not product placement. I actually stopped drinking orange juice. I find it too sweet. Anyone else find it too sweet? Let me know in the comments if you're a fellow orange juice avoider. And we're here. So what does that mean? Short covering is basically in this direction. So it means they got caught with their shorts down and they're having to buy back their positions. They've kind of done that now, right? If you look at this line here, very, very rarely that we are above that. So we're kind of at kind of max pain here for the shorts, but it means they've already unwound those positions, which means, again, they're not helping us push the market further up. Enough reasons yet. Skew. The skew is up. It sounds like a song, doesn't it? Don't worry, I'm not going to start breaking out into song. That would be absolutely ludicrous. Give it a few more weeks, we'll probably get there. So what is this? This is skew. What's with the strange concepts today, Felix? Skew, and I'm going to explain that to you what that is. Generally speaking, skew going up and the S&P going up at the same time as they are right here is a little bit worrisome. Skew at 100 is normal. A skew at 100 is here, just to show you that normal doesn't happen very often, not in the 2022 at least. That means risk is evenly balanced across the S&P. The tail risk, the sort of black swan, the outlier risk is very, very moderate. Skew at 120, where we are right now, is looking a little bit more panicky. So we're kind of going up again here to fairly elevated levels. And bear in mind, 2022 was one of the craziest years on record. So very much elevated. So therefore, again, the market pricing in some madness. Now, how do we make money out of this? And I'll show you a trade in a second that is actually free that you could set up. Not completely risk-free, but it doesn't cost anything to set up. And by understanding all of this gibber that I was just talking about, it allows me to make more money in the market. And that's also what I teach. So I'd encourage you to check it out, how we made 126% returns last year. You have two ways of figuring that out with us. If you have a five-figure portfolio already, so you're swimming in a little bit of dosh, and then you can check out our coaching page. Go to felixfriends.org/call, and we run you through it. You can book a call with us and have a chat with us. We'll explain to you exactly what it's all about and let you know whether we can help you or not, because we only want people we can genuinely help, because I like people to be successful. It makes it a heck of a lot more fun. If you're new to investing, you're just starting out, you're not rolling it in it quite as thickly, then we have also a pre-recorded course. It's 100 lessons plus pre-recorded. And you also get to watch me trade live every day. I did a live stream today, about an hour ago, where I set up some options, earnings trades for tomorrow, and also showed you yesterday we did a live trade. Was it yesterday? I think it was yesterday, where we set up some options trades, which actually came in very, very nice and profitably. So we made about 5% overnight on those trades, which is nice. And we closed out of them already. So as well. So felixfriends.org/options is where you check that out. And then let me show you how a crazy options trader might look at this. How can you make money out of this without spending any? That's always a good question. That's always like how I like to look at things. So this trade here doesn't cost you anything at all. You actually get 10 cents. You get a dime. I know it's not that much, but it doesn't cost you anything to set up. It has a 76% chance of making you money, at least a dime, which isn't too bad. And say if the SPX, let me make this a little bit bigger. So what if the S&P, there's a trade on the S&P 500. You could do it on anything else as well. The S&P goes, say, down to 170, so the SPY, because I did that because it requires less money. How much money would you make? You would make about $1,000. So you make about $1,000 profit out of your 10 cents. Now, if the market really goes for it and really, really tanks to say 360, well, you make about $2,000. So the risk reward is pretty good, isn't it? At least the cost reward is pretty good. Is there a downside? Yeah, there is potentially a max loss of $800 if the market goes to about 480 or something like that. So it's a directional call. It's a bearish call. I haven't set this up. I probably won't today. I'll have a look at how the market sits at tomorrow and how the options expiry comes in. But it's the sort of thing that we can look at where we can have a very, very large potential upside and a very, very low cost of getting into it. And of course, you don't have to get out of this with a max loss. If the market goes in the wrong direction, you can get out of it here or here or here. You don't have to wait all the way till you are at max loss, right? So you could get out of these things with typically a $100 or $200 loss or something like that, which is a little bit more sensible. So just as an eye opener, please don't run out and do the trade. If you want to use it in a paper trading account, if you don't know what a paper trading account is, if you're using Thinkorswim, which means you are usually in the United States, or if you are anywhere else in the world, Interactive Brokers, IBKR, both offer paper trading accounts which allow you to mess with things like this and understand and learn and practice. And that's how we teach, because I don't like people to lose money. So we make you paper trade. So bit of a thought of the day, but I thought I'd share it with you. If you enjoy this kind of slightly bonkers macro update, let me know in the comments down below if you thought it was just abysmal, but you're still here for some reason. Also, let me know down in the comments below. I appreciate your comments. And give us a ring, felixschwenzer.org/coaching, and we'll walk you through how we made 126% return on capital in 2022 and how we are planning on doing something very similar in 2023. And you can, of course, see all my trades and everything. I believe in transparency. That's the one thing I think this industry is missing. So if you want to see what an old banker does, then check it out. Thanks very much for watching.